Good morning. It's Monday, August 13th. This is George Kachuk with Know Your Options Inc. reporting you from the CME Group trading floor in Chicago. Markets are pretty flat this morning and slightly down. However, there has been some pretty positive developments in the markets over the last week. If you recall, we're looking for the NASDAQ to stay above 2,900. We got well above that. We got up to 3,000. But the most interesting thing is that happened last Tuesday is that the next few days the market traded sideways in a pretty tight range. And that's a big character change from what we saw in the June 4th bottom. If you recall, the market we kept going up in this choppy seesaw fashion, and every time we hit a new high, we'd retrace pretty hard for 3 to 5 days. Same with the S&P 500. We're looking at it to stay above 1360. S&P is above 1400 now, and it's been able to hold that level all last week. And again, the same pattern. We'd hit a new high and it would retrace 3 to 5 days, except last week, once we got above 1400, the market traded pretty tight sideways. So this might be a new trend developing or a new trend change. So another topic we want to cover today is, so what else can you do to maybe spot good equities to get into? Now, let me say up ahead, any names I do mention, just strictly for educational purposes. These aren't buy recommendations or anything. So one of the things you do want to look at is, I call it mutual fund sponsorship. The big money in the market comes from mutual funds, hedge funds, pensions. That's really where the big money. They're moving 70 cents out of every dollar in the market. So if you're involved in equities and you want to be long in equity, you probably want to be in something that a better rated fund is owning. The idea is that you have a little bit of support on your back. These funds are so large that when they buy a position, they're going to put in 10, 20, 50 million dollars, $100 million into one stock. They're not going to buy it all in one day. They're going to continue to buy it over a period of maybe 3 to 6 months or maybe even years. So as the stocks pull back, when we're in this choppy pattern, that's why you're seeing support on certain equities. These guys are stepping in, quietly accumulating shares as the market goes up. So how do you spot this? Well, you can do it yourself, or you can there's various software available where you can track the better funds. You can get this information from Morningstar or Investors Business Daily. Well, they'll show you what certain funds have accumulated over the last year. And what I'd like to do is even take a look at the last 8 quarters. If you're interested in certain stocks, see which funds are accumulating these stocks over the last few quarters and see if that sponsorship is increasing or decreasing. So you can just run a simple screen if you get this kind of software and just ask you to show you which stocks are being accumulated by funds and how much is it getting bought up on. So for instance, not coincidentally, if I run some of these screens, again, we come up with some of the names that we talked about last time that were in the better industry groups. For instance, in the chemical agriculture sector, that industry group moved up. And if you look at some of the top stocks like CF Industries or Agrium or Rentec, you'll see that over the last few quarters, top funds have been accumulating these shares. You see the same thing in the biotech sector. If you look at Amgen, Pharmacyclics, Regeneron, you also see that over the last few quarters, top mutual funds have been accumulating these shares and their positions have been increasing. So again, this is just one piece of the puzzle. Always let price and volume be your guide. This is George Kachuk with Know Your Options Inc. coming to you from the CME Group trading floor in Chicago. Have a good trading day.